Hello and welcome. I'm Chris Klimak with the Financial Accounting Foundation. Today I'll be speaking with Jeff Gabello, a project manager with the Financial Accounting Standards Board, or FASB. Jeff currently is leading the board's project to improve hedge accounting. Today we'll be learning a little bit about Jeff and about progress on the hedging project. Thanks for being with us today, Jeff.
Thank you.
So as I mentioned earlier, you've been with the FASB for about a year.
Yes.
What was your previous role before joining the FASB, and how did that previous role prepare you for your current role?
Well, my prior role was at IBM, and I was there for 5.5 years in the accounting policy team. And my main role was to track what the standard setters were doing, the FASB and the IASB, and to assess new accounting standards updates and exposure drafts, and assess the impacts on the company. So I was working internally with senior accounting management and with accounting staff on assessing those impacts and implementations. And then additionally, I was also working from an external point of view, writing comment letters to both boards, and also working with the FASB staff. I had actually been down here a couple of times and met with the FASB staff on some projects, for example, on revenue and on leases, and had spent quite a lot of time with the revenue recognition team. So I was really able to get a very great and extensive overview of how things operated here at the FASB. So I was very lucky and very fortunate.
So what about those experiences made you want to join the team as a project manager?
Well, as I thought about it, I kept thinking, well, this might be something that I'd really like to do, because it just seemed like a fascinating process. And it has to go back to the beginning of my time at IBM, when I really was getting into watching deliberations and understanding how things operated. It was completely different from what I had thought. I always thought that there was some sort of cosmic great answer out there, and light was going to shine on it, and like all the accountants were going to gravitate towards the one correct answer. And what I realized is that for a number of transactions, there could be many reasonable alternatives, ways to account for something. And I really liked the way the staff operated, because they would take all of these alternatives and then they would assess the pros and cons of each, and then make a recommendation, and then go to the board and say, well, you've educated the board, and now here you make the choice. And I thought that was a really fascinating process and something that I'd really like to do. So I applied, and the rest is history. Here I am.
Well, it is a process of discovery.
It is, definitely, yeah.
Yes. Now, tell us a little bit about the project that you're leading, hedge accounting.
As it stands today, it was reactivated in November of 2014, but going back in September 2014, the staff went back to the board and with a list of potential topics. And we said these are the topics that were either exposed in the 2010 exposure draft, or they were additional issues that stakeholders had identified. So what we did is presented that list, and this is the sort of the preliminary list that we're working off of. And those include, so I guess there's sort of two buckets that they fall into. One would be the issues from the 2010 exposure draft. So those issues include the move to the reasonably effective threshold from the highly effective threshold that is required to qualify for hedge accounting under current GAAP. Also the prohibition on voluntary dedesignation of hedges that was proposed in that exposure draft, recording of ineffectiveness for cash flow under hedges, and the elimination of the shortcut and critical terms match method. So those are all issues that we're going to revisit and reanalyze. And then, in addition, there were other issues that stakeholders had brought up in various outreach and also in the comment letters. One of the big ones that we've identified are hedges of really non-financial assets, like existing inventory, for example, or forecasted purchases or sales of commodities like metals and fuels and agricultural products. And there are other issues which we're looking at on financial instruments, such selected issues on practice issues that have come up in hedges of interest rate risk. And we're also looking at the concept of benchmark interest rates.
So what are the next steps for the hedge accounting project?
We're sort of at the beginning of the next step right now. We're taking a slightly different approach to this project than maybe other projects do, in that we are looking at all the issues together because of the interrelationship of many of these issues. So what we've decided to do is to go back to the board in a series of non-decision making meetings. And we've already begun those starting at the end of February. And we're going back to the board with these non-decision making meetings, highlighting all the potential changes to the model and the interrelationships of many of these issues. Then once once we've completed that process, which is going to take a couple of months, we're going to go back to the board with one or more decision-making meetings, depending on time and how long it takes, so that the board could choose the appropriate model and the appropriate improvements that they feel would be an improvement to hedge accounting. And then we will be expecting to issue an exposure draft later this year.
So we'll be looking for that. And when we do issue the exposure draft, of course, we'll be looking for stakeholder comments.
Yes, and we welcome all comments from all stakeholders. We always welcome
Right.
those. Yeah.
Well, thanks for being with us today, Jeff, and thanks to you, our viewers, for joining us. For more information about the hedging or other projects that the FASB is working on, please visit us online at www.fasb.org. Thanks.